Praise the Lord. I'm Belinda Whitfield. I am a certified public accountant. I have had the awesome privilege of serving Pastor Winston over many, many years. Just kind of share with you my story. I served in a secular environment, working with property management companies where we manage shopping centers and large apartment complexes and industrial parks. And I remember I got a call, just like you get your calling. I got a call from my pastor asking me to come in and check out the books for the church and just kind of help get things in order. So, God just used that as an opportunity for me to serve in his kingdom. So he pulled me out of the secular and into the ministry. And for about 5 years, I served as controller for Living Word Christian Center. I've had the awesome privilege of serving on the board for Living Word and the majority of its corporate affiliates. So I am going to be talking with you about today combining for-profit and nonprofit initiatives. And I have with me attorney Crystal Williams-Obie. She's from Wisconsin. And Crystal, I'm going to let you go ahead and just introduce yourself.
Okay, sure. My name again is Crystal Williams-Obie, and I am a church lawyer. And what that means is basically I handle business, property, estate issues, all within the confines of the needs of ministries and churches. Approximately 90% of my clientele are churches across the nation. Also, my husband and I have a church in Madison, Wisconsin. We've been pastoring for 19 years.
Amen.
And yes, and so recently, over the last year, I've expanded my practice into Chicago. And so we are now in Milwaukee, Madison, Wisconsin, and also downtown Chicago. And so I'm honored to be here, honored that Belinda would invite me to share in the seminar with her, and this is going to be fun.
Amen. Praise God. Okay, so our topic today, let's see, I've got my slides here. Next slide. I don't have my little clicker, so we're just going to have to go with the flow here. We're talking about nonprofit and for-profit initiatives. Now, a lot of times when we start off our churches, we're mainly focused on just church, just doing ministry, serving a congregation, and growing the ministry. And even whether you're running your church or even a regular nonprofit ministry, you may be serving the community. You may have a calling to operate a transitional housing facility, food distribution, clothing distributions, all sorts of things to meet the needs of the community. As you fulfill those initiatives, you realize you need money. You need money to fund the gospel. You need money to accomplish the things that God has called you to do. And so those monies may come from contributions from your congregation or contributions from the general public. But at one point, you start to thinking and saying, hey, maybe we can do some for-profit things. Maybe there's a business opportunity that we may want to get into and kind of use those monies to fund the gospel or fund those community projects. Mm-hmm. So what we're talking about here is how do we synchronize that? How do we bring the two together legally?
Yes.
Okay. How do we do it strategically to make sure that we're in compliance and we're not creating extra work for ourselves or we're just doing it decently and in order. So our agenda for today, we're going to be talking about business strategies for growth, for-profit and nonprofit. We're going to be talking about the types of legal entities, types of nonprofit or tax-exempt organizations. We'll get into tax reporting for them. and just the strategies of combining them together. And if we get an opportunity, we'll even talk about go over some special cases and risk management. So Crystal and I are going to kind of team up. I'm going to talk more from a tax and accounting perspective, and she's going to address things from a legal perspective. And sometimes we're in sync. Yes. And then sometimes there's just a little bit.
We have a different approach.
Different approach, right. So let's go to the next slide. So here we talked about just kind of expanding beyond the church walls and doing things, doing things outside and working with the general community. Business opportunities I want to hit on. Some of the times when you're considering a business opportunity, they may be things that may just grow out of the ministry. Let's say, for example, you have a church and you decide you want to open up a bookstore. Now there's a nonprofit version of a bookstore. You can form it to be nonprofit, but then also you can really launch it and serve the general public at large, and that could be a for-profit initiative. Some of the things that we've got going, I'll give you an example with Living Word Christian Center. We've got a number of for-profit and nonprofit entities. We've got the Joseph Center, that's a nonprofit initiative. We've got investments in gold. Forget the name of that business what is it, Crosby? The Great Lakes. That's a for-profit initiative. We even had clothing stores. We even had a water plant where we were bottling water. So those are for-profit type of initiatives that we had to separate from the church. When these opportunities come up, you want to make sure that you are doing proper planning. And by that I mean you've got to think about things like your startup capital. What is it going to take to start up this new business? You can't just jump out there and open up the doors and expect that you've got all the money coming in. You've got to think about what equipment that you're going to need, facilities that you're going to need, cash that you're going to need to fund the business until it is profitable, things like that. Marketing and lead generation. When you're starting a business, people don't just show up at the door, okay? No. You've got to plan on how you're going to launch that business and appeal to the general public and bring people in to generate money for the ministry. Operations and cash management. How are you going to run it on a day-to-day basis? What human resources or staff are you going to need? As well as, and then even cash management, building up cash reserves to fund the expenses, etc. The piece what we're going to focus on next we're going to focus on for the remainder of this segment has more to do with corporate administration. And this has to deal with choosing a legal entity, okay, whether it's going to be for-profit or non-profit, and what type of legal structure we want, and what's going to be involved in that. Next slide. For-profit. Crystal, you want to share with them what a for-profit business is?
In the simplest terms, a for-profit business is a business or an activity that you create so that you can make money. Mm-hmm. Amen?
Amen.
Is that okay?
Yes, right.
Okay, so it's okay, to say, we would like to start a business for the sole purpose of generating revenue. So that is the difference between a business and a nonprofit, a purpose, so to speak. So even through a nonprofit, your goal is to have some profit at the end of the year, Absolutely. Right? You want Absolutely. To always stay in the black, right? But with a business, your goal can have a ministry focus or foundation, but the goal should be to make a profit. Mm-hmm. Amen? Mm-hmm. Amen. And so some of the things that I ask, pastors and leaders of churches, particularly when they say, we'd like to start a for-profit business, So the first thing that I want to know is, okay, so do you just, have you run across a great business idea? Do you personally have some skills, talents, giftings, anointings to do this? Or would you like to extend the mission of your church and the vision of your church, but in such a way where you could lawfully earn income and have that business place that income back into the ministry? And so another question that I would ask is, will the purpose of the business fit squarely into your exempt purposes or your religious and educational and charitable purposes? If so, great. Then there are certain strategies or legal strategies that we would follow. If not, great. We'll follow another legal strategy. The biggest issue that you want to look out for, at least from my standpoint, is you don't want to jeopardize your ministry's tax-exempt status by failing to do the proper planning, by failing to engage the services of a CPA, right? You definitely need to speak with an attorney when you're creating subsidiaries or sister organizations, because there are compliance issues, there are liability issues, and then you also want to make sure that that business will actually be, that you will actually be able to operate that business in the manner that you intended. Amen?
Amen.
Amen.
Can I add to that?
Yes.
One of the the key differences that I see between a nonprofit and a for-profit is that a for-profit entity is designed to line the pockets of the owner,
Yes.
of the investor, whether it's an individual investor or it's a group of investors that have gotten together, or in this case, we may be talking about a nonprofit that's looking to start that for-profit entity. But when you own a for-profit business, your income potential, let's say it's just your business, your income potential is limited. And the reason I'm bringing this up is because you may have an idea to start a business, and you may be thinking, okay, should that business be under the church? Should this be something that we want the nonprofit to do? Or is this something that I want to do on my own? Okay, when it's yours, your income potential is unlimited. But when you bring it under the nonprofit, then now, you've got some limitations there. Okay, so so when we're thinking about, I know of some people who come to me with their business ideas, and I can tell it's something that they've birthed and that they've started putting money into. It may be a daycare center, because those are that type of business, it could be either for-profit or nonprofit. And so a daycare center could have been where a person who has developed that business for 5 or 10 years, and now they're trying to decide, should I make that nonprofit or for-profit? What should I do? Key thing is, hey, do you want a board determining how much money you make? Okay? As long as it's for-profit, that's yours.
Yes.
You decide how much money you want to make. You decide what your income is. Otherwise, you're going to be answering to the board, or the board is going to decide how much your income is going to be. With the nonprofit, your general purpose, when you're forming those, usually we form them for charitable, educational, or religious purposes. They're controlled by the board. Okay? Your personal income, you being the one that's founding this, your personal income is limited to what is considered to be fair and reasonable compensation. Okay, so just think along those lines when you're trying to decide if you have a business opportunity that's kind of gray, that could be one or the other. I'll give you another idea. Let's say, for example, you are a writer. You write songs, or you write books, and you're wondering, okay, should I allow the corporation to own that, or should I bring that under a nonprofit corporation because these are spiritual books and things like that? Well, again, you bring it under the nonprofit, who controls that? The board does. What's your income potential? Limited. Okay? But what if you owned that book, you distributed that book, Your income potential is unlimited.
Can I add to that also? And then also, if that book were yours or that product was yours, you also can license that book or that product to your church and get royalties from that and own it.
So, yeah, so those kind of things you gotta have to think through to determine, what's your end goal? Is it is there an opportunity? Is this a gift that God has given you, for you to get unlimited income as opposed to bringing it under the nonprofit? Usually, I look at forming a nonprofit when the sources of income are primarily going to be from the general public through free will contributions or through grants. That's when you want to look at forming a nonprofit. Next slide. Types of legal entities, corporation. A for-profit corporation, you could have a C corporation or an S corporation, but overall, the legal entity type is a corporation. With a C corporation, and we're kind of going quickly over this, but the key thing is that when you make profits from that corporation, the corporation is going to file its tax returns and pay a income tax on those profits. But the investors that received money from the C corporation is going to have to report that on their tax return. So you have what we call double taxation with the C corporation. We usually avoid that by forming an S corporation. And that's what we refer to as a pass-through entity. That means that, that corporation is going to file a tax return, but it's not going to pay income taxes. The profits are going to go over and be reported to on the investor's personal tax return, and they'll pay the income taxes. So you avoid that double taxation. With the nonprofit corporation, those entities are not subject to income taxes at all. I'll let you talk about the limited liability company.
Okay. The limited liability company is similar to an S corporation, I believe, in the sense that the revenue that is earned passes through, right,
yes,
to the owner or the members. So with the limited liability company, you have the protections of a corporation, right? You have you have the protection from liability. So with corporations, there's what we call a corporate shield, right? So there's a shield. If the corporation is sued, you don't have to worry about, your bank account and your home and your cars being seized to pay that liability. It is the corporation's liability. So the corporation is separate from its members, right? So with the limited liability company, you enjoy that same level of protection from liability, but you also have the benefit of not having to worry about having a board of directors. Many limited liability companies do create boards of directors, but they are absolutely not required, okay? And then also, you're not subject to that double tax.
That's correct. That's because it's a pass-through entity.
It's a pass-through, or disregard it, yeah.
Let's go to the next slide, and we're just gonna give you a snapshot of the other types of nonprofit or tax-exempt organizations. Most of you are familiar with the 501c3. There are other numbers under the 501c3 or 501 code that are also tax-exempt organizations. That includes credit unions, title holding companies, and Crystal's going to talk a little bit about that. Charitable organizations, which is the 501c3. 501c4 is a social welfare organization. 501c5 is like a labor organization, and then there's trade associations and social clubs and fraternities, etc. So all of these are different types of tax-exempt organizations. So, because sometimes you may hear the term tax-exempt and nonprofit used synonymously. Okay. Next slide. So here we're going to talk about some strategies with for-profit and nonprofit. First of all, usually when you are combining for-profit and nonprofit, you want the parent company to be the investor, and your subsidiary is going to be your nonprofit your for-profit organizations. So in this slide, we show you how you can have the parent company, and under that nonprofit parent company, you could have a for-profit LLC, a for-profit C Corp, S Corp, or even you can have a subsidiary, another nonprofit organization that you may have formed as well. The key thing I want to emphasize is that if you're going to have for-profit companies under a nonprofit, I encourage you to make sure that the nonprofit organization is the only investor. Okay, so it's a single investor in that company, and the reason that you want to do that is because when you have a nonprofit organization that's forming a for-profit, and that for-profit, you bring multiple partners in. Let's say, for example, the church wants to start a for-profit bookstore, and the church is going to be investor. The pastor is going to be the investor. Maybe a couple more board members, and somebody's friends going to be investors. Now, unfortunately, I mean, we can be a little bit in the flesh here, but when we start running out of money, the other investors start looking at the church and saying, okay, y'all, they see that as a money tree. And okay, we need another $50,000 in order to do this. Where are we going to get the money? And they start looking at the church. Okay, so it creates an opportunity for these individual investors to abuse that relationship. Okay, so from my perspective, I encourage you to have it where the nonprofit organization is the only investor. Okay.
Amen. And I agree with that 100%. And one of the other legal issues that can come up in a situation where there are multiple owners along with the church. As Belinda said, the other investors will look to the church and say, listen, this business is going to fail unless we get this $50,000 or $1 million. The church has it. But then what happens is the church, by investing more than what they were supposed to invest, what's really happening is that the church now is using its tax-exempt funds for the private inurement or the private benefit of those investors, which is a violation, right, of the tax of 501c3 under the IRS code. So for legal purposes, you have to be very careful about, you absolutely can, enter into ventures with multiple parties, but there's some caution that you have to exercise, and then you have to make sure that the way that you form your subsidiary will protect the church and shield the church from being placed in a situation where it has to now somehow underwrite another investor's contribution.
Very good. The other point I wanted to bring up, when you've got this structure here with the nonprofit and the for-profit, I want to talk a little bit about the money. First of all, you can move money from the for-profit to the nonprofit in the form of donations. Okay, you can so the for-profit entities can make a charitable contribution to the nonprofit because that's a nonprofit organization. You can also, when the for-profit organizations make a profit, they can also distribute money to the nonprofit organization in the form of a distribution of dividends, okay, or any other types of distributions that they may want to make between the for-profit entity and its investors. The good thing about it is that the dividends and even the tax donation, the charitable contributions, those are all non-taxable to the church or to the nonprofit organization. So they get all of those profits or all the proceeds completely tax-free. Okay, next slide. talk a little bit about tax reporting. When you have a C Corp is going to file the 1120 tax return as well as the state tax returns. If you formed an S Corp, it's going to file 1120S as well as state tax returns. And as I noted, the owners of a S Corp is going to receive what's called a K-1 form. So that K-1 form is the form that's used to let the investors know how much profit they made and how much money they have to report on their personal tax return. Because as we noted, S Corp is what's called a pass-through entity. And even the LLC, we can go to the next slide, the LLC is a pass-through entity. And so they get the investor, whether it's an individual or another corporation or a nonprofit, they're going to get a K-1 form that says, okay, this is all the income or these are the losses that you can take and add to your personal tax return. I want to hit on this a little bit because there could be a situation that could come up with a pass-through where, let's say this for-profit entity made a profit of $100,000. And that profit is going to be reported on a K-1 form. The entity that owns it is going to have to report that on their tax return. And I'm going to use an individual as an example because it could be you as well. You get a K-1 that says, okay, we made $100,000. We're going to have to put that on our tax return and pay income taxes on it. Imagine getting a form where you've got to report $100,000 in extra income and pay income taxes. Mm-hmm. You may be in the 15, 25% tax bracket. Let's say it's 25% tax bracket. You have to pay $25,000 in income taxes just because you got that little K-1 form. Mm-hmm. Now, the for-profit business, yes, it made a profit, but who's to say they gave you the $100,000? That $100,000 could still be sitting in the bank account, but yet you've got this K-1 form that you've got to add to your tax return and pay income taxes on it. So that can be the downside of having a pass-through entity. I've seen that situation where, one of my clients, they got a K-1 for $40,000, and they hadn't received a dime from the business, but yet they had to report that as extra income and pay the related income taxes on it. Okay. The LLC, with a single owner, with regard to taxes, they're going to file first of all, if it's a single owner, the income taxes are reported on the individual's tax return. So let's say, for example, if it's an individual, you would report all the income and expenses on a Schedule C of your 1040. But if it's a nonprofit, they're going to have to do a 990. We're going to talk about that a little bit later, probably on the next slide. So if it's a multiple owner, let's say two investors in an LLC, they're going to do a Form 1065, and again, they're going to get that K-1. That basically means that whatever the profits were, they're going to have to put it on their personal tax, on the investor's tax return. Next slide. Income tax reporting for a nonprofit. When you're a nonprofit, if you're not a church, you have to file 990 tax returns. Churches are totally exempt from it. The key thing is that even though you're filing a tax return, there's no taxes due on it. It's more of an informational return for the IRS and for the general public. Okay. I do want to note with the 990 tax returns, there are some very important disclosures, and the key one that I want to highlight is compensation. The compensation for any of the board members is going to have to be reported on that 990. Okay? The other thing is that if the nonprofit, let's say you've got the church, and you form this other little community organization to do some outreach stuff, and they file their 990, if there are similar board members, then there's a likelihood that the compensation that the church is paying to their board members has to be reported on that 990 tax return. Okay? So you have to be really careful when you're forming another nonprofit organization outside of the church. You want to try to have separate boards, okay, to keep it completely separate so that there's no connection, so it doesn't appear that they're related and that now you have to have these extra disclosures of compensation of what the pastor is making, because the pastor is also on the board of this other nonprofit organization. So be very careful about that. With the 990T, this is unrelated business income. This is where you form that for-profit entity, and now you get that K1. That K1 has to be reported on a 990T, and also there's disclosures on there as well. So the 990T is how a nonprofit engages in for-profit activities, and they have to report it on the unrelated business income tax return. Let's go to the next slide. Crystal, did you have any other comments on that, on nonprofits?
Yes. I know I was thinking as you were talking, I thought, well, since you have to have a completely separate board, how is it that you maintain control and make sure that the vision and mission of that nonprofit, that separate nonprofit, is going to remain as you created it, right? How are you going to make sure that someone is not going to come and join the board and do a coup and take over? I actually had a couple of situations like this over the years, but one situation where a pastor client, he was an older gentleman, he sort of did things the old-fashioned way, and he said, we didn't have to have board members, we just love God, and we just create the ministry, and everyone was respectful, and for 30, 40 years he ran his ministry that way. A couple of young men came in and they were on fire for God, and one particular person said, hey, listen, we're going to help you get your structure together, and then we can also do outreach, and we can create outreach programs. And so the pastor, being trusting, he just allowed this small group to go ahead and form bylaws and things like that. And to make a long story short, within that next year, the pastor came to church, and there was a group of people, maybe about 10% of the entire congregation, and they decided that they no longer needed the pastor's services. They actually voted all of the current board members off the board, and so the pastor and the majority of the congregation, they pretty much just you can't do this. They got up, walked out in protest, right? Came back the next day and the locks were changed.
Wow.
So the moral of that story is you want to make sure that as your ministry expands and you create, a subsidiary, whether it's a nonprofit or a for-profit, nonprofit in particular, you want to make sure that you maintain some kind of indirect control. Can I say it that way, right? And so the way that you do that is, one way that you can do that is you can create, when you create the bylaws for the nonprofit, for your nonprofit subsidiary, right, you can say that your church board has to nominate board members for the subsidiary. Yeah. So what you're doing, but now the church board shouldn't nominate them and vote for them, right? I guess they could. There's nothing illegal about it. I've set up organizations that way because that's how the client wanted it. But just simply being able to nominate who can actually be voted on will really, really help you maintain the vision of that subsidiary without taking all of your board members or the majority of them and placing them on that nonprofit and running into the problem that Belinda is telling us about.
And just to clarify what you were speaking about, the nomination versus the voting, the church would, as I understand it, the church would nominate who's going to be
Yes.
on the board, but that board is
Will vote.
the board of the new other organization is the board members that will do the voting.
Yes.
That's
Right. And so if there's ever a question, they'll have minutes that new organization, that subsidiary, and they will be able to show, no, we control our own organization. We vote for our officers. We actually vote in board members. But the pool of people that they select from is chosen by the church.
I want to go back to that previous slide with the 990T. You all have your handouts. Make a little note where it says 990T. Avoid if possible. Okay. Yeah.
avoid if
Ideally, when we're putting this structure together, ideally we want to. The strategy that I use is where we want to avoid having the church or the nonprofit organization have to file a 990T. The reason is that the 990T raises a red flag with the Internal Revenue Service because, one, you're formed for nonprofit purposes, but yet, okay, you've got this 990T going on. That means you're doing some unrelated business activity. Now we're going to take a look, just speaking from the IRS's perspective, now we're going to take a look at, we're going to compare what you're doing as a nonprofit versus a for-profit and determine, really what are you? You could have a situation where you've got this small nonprofit organization bringing in $50,000, $100,000 a year in revenue, but now you've got this 990T showing up where you done made $2 million in revenue. Okay, really, if you really step back and look at it, you're really more for-profit than nonprofit. So that 990T could very well jeopardize your tax-exempt status. Okay, so ideally, when we're looking at the structure, from my standpoint, I want to avoid the 990T. And if we kind of go back to the previous notes, we talked about how pass-through entities, which is the LLC and the S corporation, if we form any one of those and the nonprofit owns it, it's going to have to do the 990T.
Yeah.
So we want to cross the S corporation off our list, and in my opinion, we probably want to scratch the LLC off too, because we're going to have to do the 990. But see, she likes the LLCs.
Yeah, I disagree. Yeah, I like the LLC.
Okay, she likes the LLCs, but we've got a fix for that.
Yeah.
Okay.
Yes. So the
ahead.
fix for the LLC, because it is a pass-through entity, is number one, talk to your CPA, and she can have you file a form where the LLC is actually taxed at the LLC level, where that
As a corporation.
it's taxed as a corporation. Thank
Yeah.
you. Now, also, you can also create an LLC as a subsidiary, and the way to avoid that 990T is to make sure that that subsidiary, whatever business it is doing, you have to be able to tie it in to the mission and purpose of your nonprofit. Now, there's a way to do that. So as long as that subsidiary, that LLC, is not earning unrelated business income. If the income is related, if the business activity is related to your mission and purpose, right? The general, religious, educational, charitable, so on, but then also to the specific mission and purpose of your church, then you can do it.
Absolutely. Yeah.
That's one way to avoid it. Yeah.
But there's certain rules that
Lots
you have
of
to
rules.
follow before you can, before you can consider that tax-free. And obviously, you've got to go to the book and determine, whether that falls under that category. But I want to hit on here the nonprofit and the LLC and how the taxes work for that. For starters, the parent company. Let's say the parent company is a nonprofit, the subsidiary is a single-member LLC. The LLC can make contributions to the nonprofit, And also it can make distributions to the nonprofit. So that's the flow of the money. When it comes to tax reporting, the nonprofit must file the nonprofit is going to have to file a 990T under its name. It's going to have to disclose the compensation that the nonprofit pays to its officers and directors. So it's not so much as what's going on with the for-profit. Now, because it's a 990T under the church's name or the nonprofit's name, the compensation that any officers or directors receive is going to have to go on that 990T. So, and then the other thing is, this is nice, the IRS allows nonprofits or for-profit entities to tithe. They can contribute up to 10% of their profit to the organization as a charitable contribution. And also, if those contributions exceed that 10%, the IRS allows a carryover, okay, of the excess, and you can claim it as a tax deduction in the following years. But again, you know, I like to avoid that 990T. So, you know, I don't necessarily recommend the LLCs, but if you form an LLC under the nonprofit, the IRS allows you to file a form to where you can say, yes, we're an LLC, but we elect to be taxed as a corporation. Okay? And then that way you don't have to do that 990T. Let's go to the next slide. Let's say the nonprofit is the parent company and the subsidiary is an S corporation. The S corporation can make distribution or contributions to the nonprofit, and also the S corp can make distributions to the nonprofit. Whatever, you know, let's say for example it made $100,000 profit, it can distribute that profit up to the nonprofit. And again, because the nonprofit owns it, those contributions and distributions are tax-free. If it were a for-profit person or an individual owning it, they would have to pay income taxes on those distributions. Now, the tax reporting. Again, because the S Corp is a pass-through entity, so technically, the nonprofit is going to have to file a 990T under their name, and still, just like the LLC, you're going to have to disclose the compensation that the nonprofit, church, or other board members is receiving as officers and directors. Again, they can make contributions of up to 10%. Next slide. The C Corp. Now, the C Corp, in my opinion, is a little bit simpler. Again, she kind of prefers the LLC. To me, I like the C Corp. I like the C Corp because I don't have to file that extra form to elect to be taxed as a corporation. I'm already a corporation, so that's my way. If it were me doing it, I'd avoid the LLC, do a C Corp, and I've automatically avoided the 990T. Okay, without going through that extra step. So as a C Corp, the C Corp can make contributions to the nonprofit and claim them as tax deductions. They can distribute money or dividends to the nonprofit, and again, that's tax-free for the nonprofit organization. The C Corp is going to file their tax return. They're going to pay income taxes on the profits. Now, strategically, you want to try to keep those profits as low as possible to minimize the income taxes, right? So we're going to make contributions because we can claim those as tax deductions, and that can lower the profits as well. And there's some other things that you can do with regard to, you know, when you have a nonprofit and a for-profit, you might want to consider if you have employees that are kind of working for both companies, split the pay, where the nonprofit is paying less and now the for-profit is paying some of that, so they can claim that as a tax deduction. They can claim, you know, the salaries, the Social Security, Medicare taxes. They can claim you're sharing the health insurance costs. Anything that you can now start shifting over to that for-profit as legitimate business expenses. We can now lower the profits and minimize the income tax ramifications behind that. Okay. Next slide. I noted that you can file, if you were an LLC, you can file the 8835 form to make that election to be taxed as a C Corp. And when you do that, now this LLC can file the 1120 form just as though it were a regular corporation. And when you do that, same thing, you're treating it as a corporation. You can make a contribution of up to 10% of those profits, and if you contribute more, it can be carried over to the next year and claimed as a tax deduction on the C Corporation's tax returns. And again, dividends are distributed to the nonprofit organization tax-free. With the C Corporation, you do have to disclose compensation, but only the compensation that the C Corp is paying to its officers and directors. Okay, so just because let's say the pastor is the pastor on the board for the church, and then also the pastor's on the board for the LLC, the C Corporation. If the pastor is also receiving compensation from that C Corporation, then only that money that the C Corporation is paying has to be disclosed. Now we don't have to reach over to the church and report what the church's compensation is for the pastor on that tax return as we would have if we were filing a 990T. Okay? Yeah. Any questions so far? We got mics. Okay, let's, someone should have a mic to ask a question here real quick. As long as we stay on topic, okay? Yes.
An existing 501c3 under the long form, and then you develop a new ministry under the short form, and you want to turn the new ministry into a church under the short form. Is that possible?
I'm sorry, what do you mean by the long form and the short form?
The long form is the 501c3 that doesn't require the annual reporting, whereas the short form is the one that requires, the IRS manages that more closely.
You're referring to the annual tax returns, the 990, the 990N and the 990EZ, that's based on the revenues?
I kind of probably got off subject a little bit. I was really talking about the 501c3.
Like the application?
The application,
like
so you have a standard 501c3,
yeah.
And then you develop a new
form.
Ministry,
under that EZ.
and say you develop a new ministry under churches helping other churches, okay? And now you want to turn that new ministry into a church, and you don't want to change the short form. You want to continue to run the ministry under the short form. Short form has a 5-year life to it, so it expires in 5 years.
No.
They actually changed that, I think, right? I think you're talking about that 5-year.
Revenue?
Yeah, like
The $50,000?
Yeah. Okay, so I think there's a couple of issues.
Yeah, a couple
we
of
got,
issues.
but you're all right. You're all right.
So you
You're all right.
don't have
so a couple
to
of issues.
You don't have to do as much for the short form as you do the long form, and you
No.
get the 501c3
Well,
back quicker.
Let me clarify something.
Yeah.
First of all, whether you file, and I think you're referring to the 1023 versus the 1023EZ.
Yeah, I couldn't
Yes.
think of the
Right?
form. Yes.
Okay, to get your 501c3. Whether you go the long form or the short form, you're going to get a 501c3 letter, and it's all the same.
Okay.
There's no difference.
The
There's
difference
no
is the fee that you pay.
Exactly. That's the only difference is the fee that you pay. So once small organization gets its 501c3 letter, and I want to clarify that. With the EZ, the new 1023 EZ, you can file this short form and pay a filing fee, I think $200 or $250. And but you can only do it if you anticipate your annual revenues to be under $50,000 each year for the next 5 years.
4 or 5 years.
Okay?
Yeah.
But that's just what you when you're applying, you really don't know what your annual you believe in God is going to be a lot more, right?
Yeah.
Okay, but you're applying under, based on your initial plans, it's going to be on the small side. So if it grows and becomes larger, the IRS is not going to come back to you and ask for you for that other the rest of the money because you went the short route. Your letter is going to be the same. You're not classified any different. The only difference in the classifications is church versus what I call a regular nonprofit
Yeah.
for charitable purposes.
So
Okay.
you can operate the ministry under the easy,
Yeah.
as it's
You
the
got
same
the same
thing.
letter.
I just know it's a lot more.
The long form is a lot more work.
Yeah.
It's a lot-
Absolutely.
Well, the long form's a lot more work, but there's no annual reporting for the
Both
long
of them
form.
do.
Yeah, both have.
do?
Any
Well,
nonprofit has to do the
But it's
990.
not. Is it as much as it's the same as the short form though? So it's the same
Yeah,
kind of the same
right.
level of reporting.
Yeah, and I'm going to clarify that.
Yeah, because I've got more
I think he's
paperwork
talking about the
back.
postcard.
They're
I've got more
Right. You're
paperwork
talking
back
about
for the
the
short
990.
form
Yeah.
than I did
Yeah.
doing the long form.
Yeah,
That's
let
why
me
I asked
clarify that.
Okay.
First of all, now, so let's start here. Let's just pretend we start off as a nonprofit. It's a small, we do the filing as a small organization, and we do the 1023 EZ. We pay our little $250, and we got our letter. We go the first year and realize, oh, we brought in $25,000 in revenues. Now, the IRS has 3 versions of a 990 form. They have an N, which is like a little half-page form.
Yeah.
Okay? You can do that. You don't need to hire a CPA to fill out that half a
Right,
page. Okay. So you got the 990N. You only made, and if your revenues are under $50,000, you can do the 990N.
Yeah.
Okay. So year 1, we do the 990N. Now, year 2, we put a whole lot of prayer on this thing now. We done made $250,000 in revenue.
Right.
We can't file that 990N. Now, even though we did that little easy version of the form to get our letter, the IRS don't care. Okay, we just moving forward.
Right.
Each year, you look at your annual revenues to figure out which form can you use. Can you use the easy or the long one? Okay, so you have to decide which version of the form you can use. So the way you applied is not permanent.
Yeah.
Okay, just because you took the shortcut to get your letter, that's not giving you a permanent status. Every year, you have to look at your revenues to see which version of the form, of the 990 form you can use. We good?
Could I address just another legal aspect of your question? It was a really, really good question legally. So if you organize a nonprofit as, let's say, like you said, pastors helping pastors, right? It's a religious nonprofit, but it is not a church, right? And then you start a church, right? Now remember, as far as the IRS is concerned, and I'm going to need you to help me with this, the church does not file 990s. The church is a different type of entity than the religious nonprofit.
Right.
For instance, evangelists, itinerant ministers. When you create that ministry, that's a religious nonprofit. It's a nonprofit that has religious purposes, but it is not a church.
Correct.
Meaning you don't have regular services, right?
Right.
Where the public is coming, you're going to them. So if now you change your ministry, so you go from being an itinerant minister to, I'm going to plant a church and I'm going to pastor. Well, from a legal standpoint, I would like to see a letter to the IRS to just let them know that your organization has changed from a general nonprofit to a church. Now, there's going to be some things you have to do, though, because if you incorporated your ministry, right, if you file articles of incorporation, well, now you're going to have to change those. They're going to have to be amended, because in order for now the IRS to say, oh, you're supposed to file a 990, now you're saying, we don't have to do that anymore. We became a church. So now you want to make sure you have everything in order to show that you are a church. And I've got one other thing for you, too. If you have 2 501c3 organizations, that's fine. But if they're doing the exact same thing, right, you can, once you get to a point where you have several different ministries going on, you don't need to keep filing applications for recognition of tax exemption. If the organizations are separately incorporated, then you can fill out, you can request a group exemption. Now, that's a lot more money. I don't know how much that is, but you can do a group exemption. You have one 501c3 recognized
for all
organization, and then all your other organizations can use that, so they don't have to fill out their own 501c3 form.
Let me just kind of hit on what she was talking about converting from a regular nonprofit to a church. She shared with you about you can send a letter. Years ago, you could do that along with all your documentation, but now there's a form for that. Okay, and a fee, $400 to upgrade. I call it upgrading. Upgrading your status from an itinerant ministry or a regular nonprofit up to claiming that church status. And yes, sending in all the supporting documents to prove that you are a church. Okay. All right. Any other questions?
I've got a question.
Oh,
Question, yeah. About a month or so ago, I read in Fast Company, I think it said, there's now a new type of corporation called a public benefit corporation that one can choose. Is there any implications that might be affected a church choosing to be a public benefit corporation as opposed to a C Corp?
Can I address? So the public benefit, based on, I have a little limited knowledge about it in that I don't have any clients where I've actually created public benefit organizations, but that's more of a state law form entity issue. So not every state has a statute or a framework for creating public benefit organizations. Basically, some states have what they call the low profit organizations. In other words, they're say it again? The LC3. Only certain states allow that. Not every state allows that.
Yeah.
Okay? Illinois does. Wisconsin does not. So a public benefit organization is basically a nonprofit that's doing some good. Now, I don't know, it depends on what the mission of the organization is, because you can file an application for recognition of tax exemption using Form 1024, right? Probably to create that public benefit organization. I'm not sure if all of the details of the rules, but one thing you want to look at is you can be exempt under 501c, but that doesn't mean that donations can be claimed as charitable deductions. Yeah. I'm not saying that you can't with the public benefit.
Right.
I'm saying I do not know the answer to that, but yes, there are public benefit organizations, and basically they're like social enterprises. Different states call them different things, but one thing that you want to make sure of, you need to know why you would want to create a public benefit organization versus a 501c3 or 501c4.
The article I read said that it is now an alternative to a C Corp. And a number of corporations in the state of Delaware just passed this law, I guess, a couple of years ago, and now real companies are starting to consider that, because legally, it said in the article anyway, that C Corps are legally bound to get maximum profit for their shareholders. Public benefit corporation has a dual purpose: one, the public benefit, and a profit for their shareholders, which some of the millennials that are now CEOs are starting to look at as a more responsible way to respond to communities than just being that C Corp. So that's, I don't know how true it all is, but that's what I did read.
Yeah, and I do want to add, there are some states that simply recognize public benefit corporations as nonprofit organizations automatically. California is one. You file your articles of incorporation and note it's for public benefit, then you fall under that nonprofit corporation status. We're out of time. Oh, no. We had a good time. Did you all get some good information? Very good.
I hope this information was helpful. Now, if you have a question, please leave it in the comments.
And if you'd like to get more tips, be sure to subscribe to our channel. At Whitfield & Associates, we're here to help you get organized, get in compliance, and get control of your finances. So be sure to visit our website at churchcpa.com. Thank you and have a blessed day.